Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for the weekend version of Friday the 16th of June 2017. By now you've all that wanted my gold report have had access to it, and I hope you like what you've seen. Now the gold market up a little bit today, but what does it mean? Nothing. The market's still at that very important junction. We'll show you that in a minute here. When you look at the silver, you're still down on the day. So the gold-silver ratio is favoring the gold over the silver. Excuse me. Copper's pretty much unchanged. Platinum, palladium, well, that spread we'll show you in a moment what's going on. The event of the week, very clear. It was the Fed. Two elements that the Fed did. First, they raised the interest rate, which was fully expected. Then they said that they are still on target of another interest hike in the latter part of this year, in other words, the next 6 months. In addition, they want to shrink their balance sheet. All of these events are known events. The market's in a battle with the Fed. If you look at the bonds and the notes, they continue to rally. When they rally, it means real rates are dropping. The market is not buying into the economic data that the Fed thinks is, while it's soft now, it's going to pick up and get better. Which one is right? I hate betting against the Fed. They have more money than you have. So that's the first thing. But if they get it wrong, and Fed, they can get it wrong, and it's happened in history. If they get it wrong, that changes this whole outlook of this market. So things we have to be on the lookout for. Let's look at the monthly chart of gold. The first thing that I see, excuse me, is the market is forming, let's call it a pennant. I call it a triangle, but you know, that's really called a pennant by most people. And it keeps narrowing in. This is your downtrend line, your uptrend line, and I think they're valid. This is the 18-month moving average of closes in red, month. So this market's at a key spot. It has tried to break out to the upside, did it this month, failed. Has pulled back from that now in the neighborhood of $40. If the market gets under the 1214 level, it'll be an attempt at a downside breakout. And if it lets go to the downside, you could come back into this lower end of the market. You're at a very important area. So then I move to the weekly chart, and I just want to see what it looks like on the market. And this has been your up thrust. No doubt this was your recent break low. I know where the swing lines come in, and that's why I'm looking at that. And that would be how you've gone, $11.94 to $12.95, $100 rally, and now you're starting to give up the ground in that rally. As we look at an area chart of weekly closes, you've gone from 1225.70 to 1295.20, and now you're down approximately $39 from that point. Okay, maybe a little more than that, actually. So it's fine. Let's see what the market does next. When we look at the swing line study, it's amazing. This 12-14-30 number is so important on both the monthly charts, the weekly. It just ties in on everything. So you can see how the market has still got the pattern of higher lows and higher highs. That's what the swing line helps you to see. What is the pattern that's there? When I look at the weekly chart, not monthly, look at where the market went to. 1251 is the 18-week moving average of closes. You got to 1250.30, and you're sitting here at 1253. You getting why I think we're at such an important zone? This is a real key time in this market. The market also got up, hit the upper Bollinger Band. I teach you that when the market first hits that, I expect the pros to take money off the table. It's what I think they did. And now that the market's pulled back here, based on everything I'm seeing, I think they're buying again on the longer-term basis at the 1251 level. The one thing you're not getting is you're not getting the momentum that I want to see. Momentum is starting to break to the downside. I need that momentum to point to the upside. If it doesn't, momentum's often ahead of price, so that's the problem. I hope you understand why I say we're at such an important zone. In the sugar market, all you did is bounce away from the lower Bollinger Band to the 18-week moving average of closes. You broke down again. What is supporting the market right now is if you look at 1662.20. That is the 100-week average of closes, and this week's low, 1662. So that's what's holding it, but momentum is more clear to the downside, so I wouldn't be surprised if this market lets go again and makes a run to 1611. I will throw my bearishness out if prices were to get over 1774.5. But first, you'd have to go through that 18-week average, and that's not easy. In the copper, I don't know what you have here other than pure sideways trading with an overall bent on the weekly charts to being more bearish. Why? Notice how the market rallies and hasn't been able to get up to the upper Bollinger Bands, but it gets to the 18-week average and has been able to come down and challenge recently the lower Bollinger Band. That's why I say that. What do you have in the way of just a chart trend? You got higher lows, higher highs. That's bullish. But you're under the 18-week average. The two negate each other. The bias is down, and momentum is still pointing down. In the platinum market, all you've done is you came off the lower Bollinger Band, rallied back into the 100-week and the 18-week average. That's why that 18-week is so important. And bang, you fall apart today to not today, this week, to 917.40. Now you suddenly have a pattern of a higher high, a lower low, flat momentum. Difficult market, but downside bias still there. And the market that's got the upside bias is the palladium. Look at the difference. It's number one, 2 weeks over the upper Bollinger Band. Most I've seen is about 5. So you're in borrowed territory here. At any point, you can just start pulling back into it. That doesn't mean it's bearish. This number is going to go up next week, and prices can still be going higher as they move to the right-hand side. People think that means you get bearish on the chart. I've never said that. Number two, momentum is still pointing up. This is still a good-looking chart. Now, the dollar got a good boost this week, but you would think if you read the press how strong the dollar is. For the week, it is down 11.5 points. All it's done is hit the lower Bollinger Band, gone back to the 100-day average, or trying to get back to it, and that's your battleground, 97.67.5. The last high was 97.70. Momentum is still in the down tank. It hasn't begun to turn up on that chart. So when I put it all together, I see reasons for the gold market to be interesting here, and I understand the bull stand. If they're going to make the stand, it's right now. If the market gives ground under 12.14, I see a problem. Downside, get over 12.95.20, I see the market breaking out. Where we're at is the neutral territory, but the chart formation said this is where the bulls make their move. I talk about all this in my market research, and you know I wrote a gold report. It's the longest report I've written in a long time. I cover a lot of depth for you. If you didn't get it, if you sign up for my market research, and it's free, you can get a 20-day trial if you haven't had it before, you'll be able to get to this. And how you do that, go to our website. You'll see Ira's market research at www.iraepstein.com. There's a carousel of free offers. Just click on any of them. The form will appear there. Click right up here. If you're watching me on YouTube, you'll see an icon for the free research. Underneath us on many websites, of course, it says click here for Ira's free offers, and you can always call us at any point. Now, what you're going to get access to my morning video, which is not on YouTube or anywhere else. It's only played through our website with a user ID and a password that you will get. You're going to get my daily updates, minimum 2 a day, Monday through Thursday. Sunday night they start again, and Friday it's minimum 1 in the morning, but if I like the market action, they pick up. And there are days I put out 3, 4, or 5, so you've got to keep your eye on that as well. And if you like listening, I do put out an oral update that calls your phone automatically. You have a great weekend. I will see you all Monday. Take care now.